You're listening to Smart Metals Radio from the Hard Assets Alliance.
Hello and welcome to today's show with me, Andy Duncan, coming to you from London. Our special guest today is Detlev Schlichter, a former bond trader who's speaking to me from the other side of London. He's also the author of the seminal book Paper Money Collapse, The Folly of Elastic Money and the Coming Monetary Breakdown, a book written within the fine tradition of the Austrian School of Economics. Okay, we'll be talking about his book, Paper Money Collapse, Gold and Silver as Investments, Bond and Credit Bubbles, and Hyperinflation. Guten Abend, Detlev. Wie geht es Ihnen?
Mir geht es sehr gut. Wie geht es dir, Andy?
Fantastic. Now, that's enough of me butchering the German language. In 2009, you published your book, Paper Money Collapse, and got lots of attention for it because it was just sort of post-Lehman, and you were a bond trader, which gave you lots of credibility with people like Max Kaiser and so on. But why haven't we seen a paper money collapse in the last 5 years?
Well, I think the reason is that central banks have obviously opened the monetary spigots and pushed a lot of money into the financial system. I think there are a couple of reasons why inflation has so far not been higher. One is simply that a lot of the financial instruments that previously, before the crisis, functioned sort of as quasi-money, as money substitutes, sort of died in the crisis, and therefore there was now more demand for money proper. And in a crisis, the demand for money also goes up because of rising uncertainty. So we had the extinction of near money forms and genuine demand for more money. And another factor has been that banks are reluctant to lend and people are reluctant to borrow in the crisis. So the monetary transmission mechanism hasn't worked. So this whole process will just take more time.
Now, I know the Austrian school usually refuses to give out timetables because hyperinflations are highly psychological, like in the Weimar Republic. But if you see it still as inevitable that we're going to have a paper collapse, do you have an outside time limit where you think it must happen?
It's very difficult to give a time forecast here. Now, the first thing I should probably say is that my forecast is not that hyperinflation as such is strictly inevitable. I mean, the clear point I'm making is that our current monetary system is unstable, inherently unstable, and ultimately unsustainable. And I think in the long run, there are really only two feasible endgames. One is that at some stage, the authorities realize that we cannot continue just printing ever more money and blowing ever more bubbles, and that we have a voluntary return to some sort of more stable, hard monetary system, whichever way we can organize that. And then we would have to allow the market to liquidate the imbalances, and there would probably be a deflationary correction. I think there is no political will to do this. This is politically unacceptable, and I think, therefore, the less likely outcome. And the other one is we continue to print money. And I think my main criticism of policy right now is not that quantitative easing or other policies will quickly, in the short run, lead to hyperinflation, but that central banks have painted themselves into a corner. They have to continue with these policies. And every day they continue with these policies, it will be harder to get out. So time frame, I think something big will happen over the next, I keep saying I think within the next 5 to 10 years, something big. That sounds long, but it could be faster. That could drag this out, but the system will not return to stability. That's my main assumption.
Now, we have a global paper money system based on the dollar, which has been the kind of main reserve currency since 1971. Do you think that this situation, this crisis, will occur globally all at once, or will it occur around the world in various areas, so possibly in Japan first and then Europe and then the US, or is it going to be a kind of whole global event?
I think if we had one of the major currencies go into a real monetary crisis, and the main currencies I would say are the US dollar, the yen, the euro, and potentially I think even the pound sterling, then I think this would quickly spill into other areas, because that would certainly undermine the tremendous confidence that people seem to have in these big, fiat currencies. Obviously, we had many currency disasters on smaller currencies almost all the time. In the 1990s, there were various hyperinflations. We had Argentina as recently as 2002 going into a major crisis. But with the smaller currencies, people don't connect the dots and don't translate this to the bigger ones. So I think the real key ones are these major currencies I just mentioned, and most importantly, the US dollar.
Now, gold and silver, they've traditionally been seen as a way to protect yourself from such crises. Now, the political will might be found to stop printing. I reckon it's probably about a 2% chance, but it's much more likely a 98% chance that the money printing will continue. Do you think people should be stocking up on gold and silver to protect themselves from these crises?
Yes, I do think that I think in this kind of environment, you do need sort of a self-defense asset. You need something to protect at least part of your wealth here, and I think it's prudent to have a big allocation to these what I call the eternal monies. Whenever fiat money systems go into crisis, then I think people come back to these traditional, long-standing forms of monetary assets.
Now, a lot of people do see gold and silver as insurance products, like you just sort of said there. But what I'd like to do is, it's traditional on this show that I give people $1 million and see what they do with it. If I gave you $1 million today, Detlev, how would you invest it personally? What would be your percentages?
That's a difficult question because I always hate to give investment advice. Obviously, I used to do it for a living, but therefore maybe I'm very sensitive as to sort of the drawbacks of doing that. But I'll be very honest. So if I look at my own sort of liquid assets, more than 50% of my liquid wealth right now is in physical gold, to be honest. And so that gives you a good benchmark. Now, I do have actually some paper currencies, believe it or not. I'm the guy who wrote Paper Money Collapse, and I still have fiat money, diversified, various currencies, and dispersed among a number of banks, to minimize my risk. Also have a little bit of Bitcoin, very small position though. It's a highly speculative, but I have a small position there. So in a way, it's a combination of the eternal money, which is gold, a bit of modern fiat money, and a little bit of maybe the money of the future, Bitcoin. Why fiat money in there? Well, there is a risk that there is a possibility, of course, that we go through periods in which the central bankers themselves get a little bit nervous about what they have been doing and scale back their operations, as we've seen in some cases, actually over the last 12 months. That can then hurt gold, and so that you can have these market movements, the volatility there. So I'm not 100% in gold, but as I said, more than 50% of my liquid wealth is in physical gold.
And on the other side of the paper money collapse, what do you see the new monetary systems being like? Do you think we'll return to gold 100% reserves, or will we return to some kind of, or not return, but go to some kind of cryptocurrency system?
Difficult to say. I mean, I think there are various options. I would say if I had to change one thing, if you would ask me if I had to do one thing to change our monetary system, I would say the most important thing to do is to take the government, the state, out of monetary phase, out of the monetary sphere. I argue for the strict separation of state and money. Like we have a separation of state and church. We should have one of state and money. If the monetary system would be handed back to the market, I think the market would. The financial system would evolve in a way very quickly in which, again, sort of the ability to create money out of nothing would be very restricted. I do not think we have to ban fractional reserve banking. I do not believe the state should enforce 100% reserve requirements. I think in any kind of true market-based monetary system, when the market again finds some core monetary assets, whether that is gold, whether that is silver, a combination of the two, or maybe even cryptocurrencies, who knows? The market will decide. Once you have such a core monetary assets, that is very likely to be a fairly inelastic form of money. And on top of that, banks of the financial system may provide near money forms as well. All of this will be fairly limited. The key problem we have is that the creation of money is now a state monopoly, and money is being created for policy purposes. So the problem about our system is that we have something called monetary policy, in which the state manipulates money allegedly for the greater good. But I think that will always turn out to be will always cause problems.
Now, it's great that you take the kind of Guido von Hulsmann ethics of money production view on money production, but the state is going to be very loath to give up its power of controlling money. What chance do you think there is of the state giving up its power? Or hopefully, will they not have a choice? Will they have to give up the production of money?
Well, I think that is, in a way, why the title of my book was Paper Money Collapse, because obviously, if the state does go back to a form of hard money like a gold standard, or if the state abandons the sphere of money and hands it back to the market, and we have some kind of market-based hard money system, in those scenarios, we will also see a correction, a deflationary correction. The market will liquidate all these imbalances that we've created over years and decades. So there is also some kind of collapse. But I call my book Paper Money Collapse because I think the most likely outcome is some kind of excessive money printing with a hyperinflationary outcome. So I think, to answer your question, I think there's a small probability that the state will give this up voluntarily. So I think we're heading towards some very, very unpleasant times. But never say never. Who knows? Maybe the public opinion changes over time. Maybe, as central banks continue with these crazy policies, at some stage, more and more people will ask questions. It's difficult to say how this is going to pan out. The only thing I can say with some certainty is that the current system will continue to be very unstable and head towards some form of endgame.
And one final question. You gave up promoting your book full-time a while ago. Have you been doing anything interesting in the meantime?
Well, since the book has been published, I've been very active, sort of promoting the book and promoting my ideas, and I started a website and a blog and gave various speeches and lectures, and that was great fun. I kind of stopped doing that in September of last year, just to step back a little bit and sort of reassess my own position and my own future. I worked almost 2 decades in the financial industry as a portfolio manager and asset manager. And so the last couple of months, I've looked for ways to maybe do something in the business world again, in the field of wealth management. I'm still looking at a couple of projects there, so something may develop on that front. The last couple of months, I've also worked very much on the book again, because in the summer of this year, we will get a second edition of Paper Money Collapse. So I revised the text, I updated everything, picked up a couple of criticisms and suggestions that I heard over the years that I sort of marketed my book. And so hopefully the book is now even more solid and better argued. I hope so. It's going to come out in the summer. And so that is what I've been working on in recent months.
And where's the best place for people to find out about this second edition?
Well, I think you may already be able to pre-order it on Amazon, but I will also very soon relaunch my website and probably start blogging again and sending out missives about how I see the world of economics and finance and central banking. I think I will become a little bit more active in the public sphere again. So you can go to my website. It's detlevschlichter.com. Pretty soon, I think you will see that website being updated again. And again, the other source is Amazon.
Okay. Now, it's been great talking to you today, Detlev. The correct place for us to have these discussions is, of course, around a poolside in the Mediterranean with some red wine. But thank you very much for your time today, Herr Detlev Schlichter.
Thank you very much, Andy. It was my pleasure.
Subscribe to the Smart Metals Radio Show on iTunes. You can also visit us online at hardassets.com/radio, where you can subscribe to our free mailing list and receive our free Smart Metals newsletter. For anyone who wants to set up an account with the Hard Assets Alliance, as a special offer, we shall be waiving opening and setting up fees. Listeners who'd like to speak to a live rep to walk through the registration process can call 1-877-727-7387. That's 1-877-727-7387. I'd like to thank Detlev Schlichter for joining us on today's show, and I'd like to thank you for listening. Until next time, goodbye.